Do you remember Terra Luna, right? One of the top 20 coins of last year in terms of market size. And then you see this massive drop from, I think the peak was around $40 billion to a whopping about $0 billion. How does all this take place? And this is actually the catalyst for what is happening now in crypto, where we're seeing company after company. We've got 3 Hours Capital here. They just filed for bankruptcy. We have Voyager Digital suspends all trading, beaten by the market here. This is Volt. Becomes latest crypto lender to freeze withdrawals. Crypto exchange CoinFlex freezes withdrawals. Finblocks raises. So Finblocks will probably seems like it may make it out of this potentially, but we'll talk about that. Crypto lender Babel Finance halts withdrawals due to liquidity pressure. Celsius, right? Celsius has been doing this for a couple of weeks. Like, who the fuck is going to use Celsius when you're stealing their money? But how does this happen with debt, with leverage? I tweeted about this, link down below, where when this was actually taking place, that this would be the catalyst for the sell-off in crypto. And we're watching this take place. So I wanted to do a video and try to put all this stuff together. Now, with that being said, if this is your first time here, what's Gucci? My name is Sam, and for those of you who are returning, it is good to freaking see you. If you'd like to support the channel, you can check out some links down below. Put this together here related to debt. Let me make my face a little bit smaller. I know you love seeing my beautiful face here, but I would like you to see the content I'm putting out behind here. Or I can just move all this shit over a little bit and then bring my beautiful face back up to the size it was. So when you lend in crypto, right, leverage you can think of as a double-edged sword, right? It helps with returns, right? Amplifying returns, but it can also be a negative, right? Because then it cuts in the other direction. And when you look at crypto lending, it is extreme risk. So let's take a look at this. If you have collateral here and you use this collateral to, say, borrow against, right? So we've got some collateral here. We're going to provide either a stable coin or some other type of crypto here. And in either one of these cases, there is risk involved depending on what we take on the other side. A lot of what is used as collateral is other crypto. So things like Bitcoin, things like Ethereum, right? What do those things have in common? Volatility. And if you're watching this, then you're probably aware that crypto is extremely volatile. So when you have collateral, meaning the underlying, the thing that is borrowed against, right? Like this house here, I borrow against this house. Now, if this house drops by 50% or 75% or 90%, like some of these cryptos, then it doesn't affect me. I just continue living my effing life. There's no issues here, right? Like I just pay my bill and I'm good. With crypto or financial assets that you borrow against, this is not the case. If the price comes down far enough, you get liquidated. So how does that change the risk profile? Well, if somebody uses, say, BTC as collateral and they borrow against that, then they are holding volatility risk, right? BTC is down from $70,000 to $19,000, right? Roughly, right? Like you can actually check this real quick. BTC 19.6 right now, 19.6, right? So when you have this happen, then you have margin calls. So unlike my house, if the house drops by, the value of the house drops by 75%, I just continue paying my bill and I'm good. I'm Gucci. Right? If the value of BTC drops by 75%, I get liquidated. There's a big difference. So there's a gigantic volatility risk. And what some of these people do who borrow, not only do they use BTC or ETH or something like that as the collateral, but they'll also borrow another volatile asset. So as you can see here, you get volatility squared. You're following along. If you understand the risk of a volatility by itself, then when you multiply that times 2, you have a gargantuan effect of volatility. Why? Well, as we described, if Bitcoin drops in price, my position gets liquidated, right? That causes liquidation across crypto depending on the size of what's happening. Well, what if I put up BTC and I borrowed ETH against that? Right? Well, then, because the idea in people's minds is that BTC is less risky, right? So they're like, I'm going to take my less risky asset, borrow against that, and then I'm going to use those borrowings to buy riskier assets because the return, hypothetically in their minds, should be greater. Well, then you have this double volatility risk, because what happens if you were to, say, borrow a risky asset, and that risky asset in relation to what you borrowed actually goes up in value? Well, that's like borrowing against this house, and then the debt increases. The debt actually goes up in value. So say that it's at $400,000, right? Say $400,000, and I borrow $300,000, and then because debt has become more expensive, then my debt actually goes up, and it's like having a variable loan, so to speak, so that my debt actually costs more money to do this. And that is why you have volatility squared, right? You have this gigantic amount of volatility risk. You can, even if you put up a stable coin, right? You can put up a stable coin and you can borrow risky shit against it. That's what they're doing. They're trying to earn yield of some sort, right? So they're attracted to these three quadrants, not this one, right? Where you can just pay your shit back. You have a stable coin and you borrow a stable coin against it. They're not attracted to that because what the fuck are they going to do with the stable coins, right? They're going to sell that for a risky thing. And then you have volatility risk. Well, we have 3 Arrows Capital confirms heavy losses from the Luna collapse, as we just talked about, right? And we just understood how risky borrowing in crypto is. I like leverage, but I like leverage on, say, real estate, not in crypto. Made a couple videos about this. Because you can leverage fiat into crypto, right? But you don't hold the same risks, right? If you're borrowing in crypto, there's massive risk. If you're borrowing in fiat, because there's 100 years plus of borrowing, there's certain things in place that reduce that volatility risk, right? The entity, the bank, is generally holding volatility risk, not the individual, unless you're getting like a variable loan. Well, 3 Arrows Capital, the giant hedge fund, well, $3 billion, so not like necessarily giant, but they had $3 billion, I think, or $4 billion around of capital under management. So you're like, okay, well, that's really not that big relative to, say, $1 trillion of capital, or in terms of the market of crypto. Well, what if I took $3 or $4 billion and I put this into several different lending protocols that I borrowed against, right? So say, for example, we had $4 billion and I put it into a lending protocol and I borrowed 75% of that. Then I have 75. Then I could take that 75% of that and I could take that and put it into a different lending protocol to borrow against that another 75%. Think of like what the banks currently do, right? And you could, if you do this in the crypto space, you are increasing your risk even more, right? Like, it's so crazy that companies would fucking do this shit. And you can take the borrowed capital from one company and put that into another company to borrow more to leverage it up. So even though Three Arrows was $3 or $4 billion as of a couple months ago, it is easily possible, but their exposure to the market was multiples higher than $3 or $4 billion, right? And the ripple effect of the Luna collapsing, then the Three Arrows here is filing bankruptcy. We have Voyager. This is literally as of today. So this is July 4th, 2022. U.S. crypto platform Voyager Digital suspends all trading, deposits, and withdrawals. And I think they go on to say that they actually hired a like a liquidation type firm or something like that. Here we go. It adds to support its exploration of strategic alternatives. The company has engaged Moeller and Company, which is probably a liquidation company, and the let's take this up. Let's take a look. Moeller Company and see what they do. I bet they do liquidations. Is a global investment firm that provides financial advisory services to corporations. Blah blah blah. The firm advises on strategic decisions such as mergers and acquisitions, recapitalizations, which just means they're getting fucked. You are getting fucked, and restructuring. Exactly what I thought, right? Because it's decent chances companies going away. And you know what? One thing happens across the board here is that I would bet that the vast majority of these companies are all venture backed, meaning outside capital, meaning some type of centralization, somebody who wants their money back, right? They're not necessarily, let's call them real businesses, because they're just spending venture capital, right? They're willing to take other risks that people who have actual capital involved are not going to take because it's other people's money. Beaten by the market, Vald becomes the latest crypto lender to freeze withdrawals, right? Remember, this is from four hours ago. This is Voyager. We're watching this live. This is Vald becomes latest to freeze withdrawals, right? Singapore-based crypto startup is the latest in a series of crypto firms to crumble. They go on to say, I think that they are also hiring somebody else. I think that they were hiring another, lawyer or something like that. Okay, but here, this is another interesting thing that they mentioned in here. They had over 1 million customers, right? So what do you think happens when companies like Voyager, when companies like Vald, when companies like CoinFlex, when companies like FinBlock, when companies like Babel Finance, when Celsius, what do you think? Right. Let's just make an assumption here that you, whoever it is that's watching this or listening to this, has some functioning gray matter between their ears. The game plan moving forward is probably not going to be to do business with any of these companies. They're going through a liquidation crisis right now across crypto. Any of these like venture-backed, outside money, right? Lending protocols, derivative protocols are collapsing, right? This is not going to stop as these positions get liquidated, and they continue to get liquidated, and then the people who are in these protocols, right? Remember that other Celsius, I think at one point said they had 1.7 million. Voyager or Voyager, whatever that one was we just looked at, I think had 1 million customers. Vald had 1 million customers. As these companies stop stealing people's money, would you, as the person that we just described who has functioning gray matter, would you continue to keep your money into something like this given the markets right now? Or, because these things are fine during market bubbles, like when the market is increasing, yeah, like it's like the tide coming in, it's going to lift all boats. So these are fine during bull markets. It's just in the long run they tend to get destroyed because of this. So I think, and you can correct me if I'm wrong, in 2 or 3, 4, 5, 6 months, whatever it takes for these things to collapse, that I would never put my money into something like this because of the risks involved with the lending piece when you actually understand this. So as these companies stop stealing people's money and allow them to actually take their money out of these protocols, people will just continue to exit these. So what happens when you continue to exit? Then you have a self-fulfilling prophecy, right? These companies will either look for more of those funds or those lawyers or investment banks that specialize in restructuring and or bankruptcy to hopefully save themselves from a legal standpoint. Is the first thing they're going to be concerned about is not fucking themselves over. And then the next is how much money can they get out of it or something like that. Because to actually, protect is what they're going to say, is to protect investors is very low on the totem pole, in my opinion, right? Because you're stealing people's money. I don't understand how somebody could justify stealing somebody's money as protection, right? It's like, hey, bro, can you, I've got an Ethereum just below. You just send me like $1,000, right? Send me $10,000, and then I'm never going to send that back to you, right? Link in the description if you'd like to donate. Does that seem like I'm helping you out? No, I'm just taking your effing money. And that's what these companies are doing. And they're claiming it's to protect the ecosystem and the investors or people with money in there. What a fucking load of bullshit. I'd love to hear what your thoughts are down below in the comment section. I appreciate you guys. Don't forget to subscribe. We got future videos coming out, all sorts of different topics on this stuff. We're going to continue to watch the collapse of these. This is what's going to drive Bitcoin down to probably closer to $11,000 or $12,000. Peace.